Creating wealth is a game of mindset. There is a wealth creating mindset that is different, and you will see that in all rich people that they think differently than most middle class and poor people. Let's take an example of what's an asset or a liability. Your car, is it an asset or is it a liability? Can it be both? Let's discuss what's an asset and what's a liability, and why the rich understand this difference and also understand how one can move to become the other. Let's jump in.
3, 2, 1.
Let's go.
Assets and liabilities are fundamental concepts in business and finance, which indicate what a business owns and what it owes respectively. As per accounting, assets are those resources that a company owns that will give future economic benefits, whereas liabilities are those which the business has to settle in the future and usually involving an outflow of resources. For our purposes, let's keep it simple. Anything which causes an inflow of cash, it creates a passive income for you in the future, something that can become recurring, is an asset. And anything which is a reverse cash flow, meaning it sucks money from you and it needs to be sent to that project that you are talking of, is a liability, because that takes money out of your pocket and goes there, while an asset keeps adding money to your pocket. That's the easiest way to look at it. So what's your car? You bought a new car. What's it? Is it an asset or a liability? If that car, the moment you bring it to your house and you do the puja and everything, remember, if you want to sell that car again, it's already, its value has got depreciated. It's now a second-hand car. So it's an asset whose value is depreciating and which asks you to invest more money into it. Into what? Into road tax, which you have to do every year. You have to have insurances every year. I guess road tax is now taken one time, but it keeps asking you to spend money on it just so that you can keep that vehicle with you. So you need to do insurance. Of course, you need to maintain it and stuff like that. So by the definition that we defined above, the car that you buy is a liability. It's not an asset. If you're saying that it helps me travel from one place to another place, then you can as well take a cab. It helps you to travel from one place to another, and it does not continuously suck money in future. You pay for the service. So you need to think why you buy a car. But can this liability become an asset? It can, provided you also let it out in its free time to some Uber driver to drive it. So you now converted a liability into something which will keep generating inflow for you. It will generate income for you. So suddenly something which is a liability is going to become an asset. So the moment it starts generating positive cash for you, it's now become an asset. This helps you clarify in your mind what's an asset and a liability. Every time you take a liability, keep asking yourself, do I need it? Can I get the same service that I need through some other way? Let's take another example where people come rushing and announce that I have bought an asset, and that's the house. You buy your house and live in it, and you tell the world that it's an asset. I have got an asset. I've created an asset. The only difference between the car and the house is the value of the asset, which is the house, will 99.9% keep appreciating. Okay, the base value goes up. But look at our definition, and definition was not from a base value, it was from the way the cash moves. The house will need continuous flow of cash from your side into the house. For what? You need to pay property tax. You need to, if you have bought an apartment in a gated community, they have maintenance fee, quarterly or whatever. They charge you some money for the security guard, for the cleanliness and all those stuff of the place. So there is an associated expenses that come with buying a house and living in it. Is there an income? No. There's no income from it. But this now by definition is a liability, it's not an asset. So we call it an asset. Yeah, the base value is appreciating, but that's not the definition of an asset and liability. What can you do instead? The rich should probably not buy the house, but they would rent a house. Because now you're paying a fixed sum for the service, but it is not sucking in money on a continuous basis. You can stop it whenever you want. But can it become an asset? Of course it can become an asset. The house can become an asset if you have given it out on rent. The moment you give a house on rent, the house is now producing passive income for you every month. It's a paycheck you get every month, and the value also keeps appreciating every year. So suddenly something which is a liability is going to become an asset for you. So it's so important to understand this difference between an asset and liability, that once you understand this, then you know why some decisions which the rich make, and you sometimes wonder, does it make sense? I hope this was very clear, and just so that it provokes thought, I'm going to ask you a question, and I want to hear your answers in the comment section below. Take time out to think and then tell me, your children at home, are they assets or liabilities? Are human beings assets or liabilities to you? So think of your children, focus on that topic, and look at our definition. Our definition is assets bring in cash, positive cash, recurring, over a period of time in the future. It's passive income for you. And liabilities suck out your cash from your wallet, and you need to spend it as an expense on that activity or that project. So liability continuously takes money out of your pocket in the future. I'll wait to hear from you on whether children or assets or liabilities. Till next time, stay unstoppable and get wealthy.